Yo, Brody, what's going on? You already know it's your boy Pip, aka Trades by Pip. You guys already know the vibes. We back and we're better. We about to be going crazy with this YouTube.
I made a content channel.
So, anyways, today, you guys already know the video. I've been talking about it a lot. I've been really preparing and editing and making sure it's really clean. We are starting our price action beginner guide, and it's going to be consisting of 4 parts. The last part will be like a technical analysis of putting everything that we learned in the guide together. So with that being said, let's get right to it. Let's go. With the price action beginner guide, part 1, I like to break down and understand what is happening, why it's happening, basic understanding. That's why if I'm going to do a beginner guide, I'm going to break it down so when we do the part 4, we can correlate everything so you can see how beautiful shit goes. Part 1, we're going to be doing 4 parts. We can do 4 parts. We're going to do market structure. We're also going to be focusing on different definitions. What do I mean by different definitions? I want to show you guys the vocabulary that I use when I'm trading so you guys can use the same, if not some similar terms. Another one we're going to be focusing on is basic support and resistance knowledge. So you guys can really understand what support and resistance really is. A lot of people just take support and resistance with a grain of salt and keep it pushing, which gets them lost later on. And then the final part, we're going to be focusing on basic time frame knowledge. Nothing crazy, simple time frame knowledge to help us with the charts and how everything's looking. We're going to use USD Chief, and how I'm going to do it is I'm going to make it on a new chart. Still going to have one behind here so you guys can see how the same boxes and lines that I use will correlate over here. So let's go back over here and let's see how this is looking. With market structure, one thing a lot of people don't like to really understand and listen to is that market structure can only be 2, maybe 3 things. It can either be price going up, which is also known as bullish, or it could be known as price going down, which is also known as bearish. Then the third one, which is called consolidation. Now, if you guys go look at these charts, right here with USD Chief, we're on a daily time frame. With the market structure that you guys see, this is a downtrend. This is bearish. So focus on the simplicity of the knowledge the market has already given us. When price is bearish, a lot of people just think price is going down, which is really wrong. You don't want to think that price is just going down. This is why I don't want you guys to think like that. If you guys think of price being bearish, you guys need to start thinking when price is bearish, price is making lower lows and lower highs. Lower lows, lower highs. Slowly going down, gradually going down, because it is a downtrend. You should know that price is trending down. It isn't just shooting down. Price is trending down. Take that in consideration. And when you are trading and you see price going in a bearish sentiment or in a bearish market structure, taking consideration for price to do that, it needs lower highs, lower lows, lower highs, lower lows, etc. And same thing for price isn't just buying up. Think that if price is buying, look at it as price needs to do higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and y'all get the point. Don't think that when price is buying, it's just going up, or when price is selling, it's just going down. Break down the knowledge to help you execute and see what's going on in the market. With market structure, why I really wanted this to be focused on as the part 1 is market structure consists of everything that you really need: price action, support, resistance, and take profit if needed. For example, we could start up here. If price was coming up here, you guys can already tell that price was on an uptrend. Price is making higher highs, higher lows, higher highs, higher lows. So up here, looking for sells off of the information that I'm getting right here wouldn't be so valid until price come at this level, failing to break the last highest point price could have gone to, and started selling off. When you seen price selling off, price came and attacked a low level that, as you can see, started up on a higher high, higher low trend. I'm only saying this because I want you to understand how market structure can help you see what is going on with the chart. It can let a lot of things go so you're not confused. So focus on how when price came and sold off down, it showed weakness. Price failed to use the same buying momentum that it had right here, which is one indication. Another indication is that you can see price made lower highs, and you know that if price begins to be selling under here, there's no buying controls, clearly because buyers are sitting right here. So with that being said, with market structure and with understanding with bullish and bearish sentiment, not only executing a trade, I've got a TP, I've got stop loss, I see resistance, I can see where price can go, and I see what price needs to do in order for me to see and play out plays that I want to play. This is why I really want you guys to understand that market structure is important. It's really important. It's the whole base in starting your trade. So with market structure, we can start going towards the definitions. With definitions, one definition I'd like to really focus on is, like I said, is understanding that when buyers are buying and sellers are selling, focus on lower high and lower low momentum. Don't tell yourself price is dumping or price is mooning. Let go of that. Just let yourself rewire that so you know if buyers are in control, that means price has to make higher highs and higher lows for it to continue. If sellers are in control, sellers need to make lower highs and lower lows to continue. So with this definition, I really want you guys to focus on how when price is selling off, notice when price starts to buy or price attacks level of support or resistance. See the weakness or the strength in it, because then you will start to be able to see the high probability moves. Now let me show you what I mean by that. Just to put a zone, because we'll go on support and resistance a little bit more later to show you guys why this is important. But we're going to put a support zone right here, a little long because we'll explain more as we get down. And then with another zone, one zone that I would really like to focus on is this high level right here. So with these two levels, I see that price sold off under here and attacked this level of support. All I'm telling myself is price was on a bullish uptrend. When price finally got to its highest point at a resistance level, price began to sell off, which is okay to happen. What I need to tell myself now is I need to see if the price is breaking this zone or if we are selling below it. When you've seen price slowly buying, I don't want to say always correlate, but it is good to correlate with how price moved at this zone last time. As you can see, when price was here, you didn't see this much wick movement. You seen price gradually just going up. The wicks were really going to the upside, not the downside. As you come over here, you can see that the wicks are really to the downside. And when price is buying, it wasn't doing the same buying levels as it was over here. It was more weak down here. In consideration that, boom, this lower high is not only lower than this one, but it is under this zone, failing to come back above this level of resistance. And that's a good indication. This is why I want you to focus on lower high and lower low momentum, because now you know that if price made this high, then to make a low, you don't know if this is a higher low or a lower low. So you need to wait for the next couple candles to form structure to give you an indication of what this really is, which now you can see, which was a lower low. Because when price made the low, it made a lower high, failed to make a new low, made another lower high, and then ended up making a new low under this level. Simply because broke this level where the buyers are at, and now since we broke, sellers are in control to start leaking under this zone. Price starts to buy, you can see that it buys to a level that it broke, failing to come back above, so it continues to make the low level down here. Like I said, lower highs and higher high momentum is key to understanding how the markets is moving, what it needs to do in the first place. So let me mark this up real quick. Boom. So with this low level, you can see when price made this low level, price began to buy up, and then you can clearly see that with the selling momentum right here, buyers started trying to come above levels where sellers were continuously selling to start buying back above a major level of resistance, seeing if we can come above it in the first place. When price started to retest, you can see that price tried to come up a bit, come up above the box a little bit, but same thing. You want to correlate the weakness into how price is reacting to the zone. If price is not reacting the same way it was before on a bullish uptrend, if you see price buying to this zone and you don't see price moving and correlating the same way, you shouldn't be thinking buys. In fact, you should be telling yourself, waiting to see if price can sell back under the zone to continue this trend, because you know, since price made a new low down here, which is once again a lower low that we figured out off of understanding that this was a lower high, we know that the first target could be here, and if we break, we can continue and hold for more. This is really why I like breaking down market structure, because market structure shows you everything you need before the money, really understanding the move. Like, you grasp the move, you can really start playing with the charts for real. Like, you can start looking at any pair and start focusing on market structure instead of thinking you need to hit it during this day at this news, or you can only trade it at this time. You want to start focusing on structure, because you know if structure is forming, only a couple things can happen. Like I said, if price is buying, higher highs and higher lows. If price is selling, and needing lower lows and lower highs formations. So this is why in vocabulary, higher high and higher lows, lower highs and lower lows is really important. And the next vocab we're going to be going to, which is kind of more into part 3, this is going to be support and resistance. And with support and resistance, we don't need to break down too much of it. I want to break down the definition of it so you can see how important it is. With support and resistance, I'm going to get away from here so I can kind of show you guys a box to make it easy. We're going to focus on doing it with lines. For now, I'm going to tell you guys that way to understand support and resistance the way I'm trying to explain it. So this right here is going to be support. I want you to know that. All right, okay? And this right here at the bottom is going to be our resistance. It looks a little weird, but just bear with me so you'll see how I look at support and resistance. In the comment section real quick, do you guys like buying that support and selling at resistance, or what do you guys like to do when price gets to a lower support at resistance? But anyways, back to this. Support is where buyers are sitting. I want you to know that, where buyers are in control to move price. Resistance is where sellers are in control to move price. The one question that a lot of people don't ask themselves when understanding definitions and understanding a term, especially in a trading world, is why and what happens if that level isn't respected like that. Now, what do I mean by that? What happens if price comes to a level of support and fails to use it to go up to the next level of resistance, and so on and so forth? And what happens if resistance fails to stay under to come back to support? This is why I put support up here and I put resistance down here, so you guys can really see what I'm about to do. So boom, with support, I want you guys to understand that when buyers are pushing to a support, or are pushing from a support level, their goal, I want you to know this, their goal essentially is actually to hit a level of resistance every time. People think that buyers are just buying till whenever, like they're buying to the moon and just keeps buying, banks are in control, but they already know where they're going. So if this is level of support, price is buying to a level of resistance. What happens at this level of resistance is the important part. Not that price was at a level of support and it bought. We need to focus on what happens at this level of resistance, simply because let's say price comes under, makes a lower high, but fails to break this level. Another higher low, makes a higher low, if I can click, and then actually breaks above this level of resistance and comes back down to the level of resistance and continues to go up. A lot of people don't take in consideration how important this is. This is basically showing you that support and resistance is control of buyers, not just a zone, not just a high being marked. It is understanding where the buyers and the sellers are. As you can tell, this is a level of resistance up here. So if this level of resistance up here, sellers are waiting to sell price, which is why when price came, I obviously gave price a sell off, because you know sellers are waiting to sell price at this level, which is why it is support and resistance. So off of that resistance, you've seen price selling off. It wasn't as strong as it was for the buyers. With that, price made that low, but we don't know if it was a higher low or a lower low. We've seen this lower high, so now we're like, okay, price is giving indication that price is getting weaker. What we need to see is the break of this, because we need a lower low and lower high to continue trend. Right now, we don't know what type of low this is. You can see as price is selling off, price ends up failing to break this low, which now lets me know that if this low is a higher low, so is this one. Like correlating with support and resistance, you can see that it gives you a clearer identification of where price needs to go and how it needs to move in the first place. Because if price is buying to lower resistance, it's okay to sell off. Sellers are here waiting. We need to see how price reacts to this zone. We need to see if price is really going to continue the sell-off, or we're going to be breaking back above. Same thing with level of resistance. If price right here, right? Price right here. If price is selling from here, we'll say this is a resistance right now. Let's not focus on this. Price is selling to this level of is selling down from this level of resistance and hits this level of support. But when price is buying, it actually makes a lower high like that, and then ends up breaking through the zone. Now, yes, it broke through the zone. You can say that that level of resistance or that level of support was broken. Now, what you want to tell yourself is, now that that level of support is broken, you want to see how price retests and reacts to the zone coming back up. Simply because you know that price at this level, it was a level of support and we broke under. So if we broke under, we need to see how we react when we come back above, when we come back to the zone from being under this level. Because if we're under this level and we start mooning back up, clearly we tapped into a level of support to continue going back on the bullish trend as always. But as you can see, price would come up here, fail to break, continue making lower highs, and then as you can see, continuing to sell down, which confirming that this level of support is now a level of resistance, because when buyers were selling here, when buyers were waiting to push price up, they weren't strong enough than the sellers, which is why the sellers ended up breaking this level and continuing. How I look at support and resistance is, I look at support and resistance as a level of indication, not a level of execution. I look at it as a level of indication, because with the level of indication, you start telling yourself at this level, you need to see this for it to continue, because price action and Forex in general moves zone to zone. Price always moves zone to zone. With support and resistance, take in consideration that yes, buyers can be at that level of support, but if price breaks this level of resistance and retests, this level is now a support. Same thing with resistance. If price sells to a level of support and ends up breaking it, this is now a level of resistance, because now off of the retest, you can see price is staying under, not going above. Same thing with support. Instead of price staying under this resistance, it's going above to continue, which is why support and resistance to me is super key, because it's not a sense of, oh, I bet buyer's going to be here mooning price. It's more of an indication to me, because it's, all right, if price came to this level of support or price came here, we need to see either or. If we're not seeing that, this is a no. If we are seeing that, this is how we can execute. Let's correlate support and resistance, market structure with time frame. And we're not going to go too long on this because I didn't want to go over, but we're here. So now, with basic time frame knowledge, one thing I want to focus on is, with time frames, you want to stay on the higher time frames when you are breaking down your charts, and especially in trade. Why I say higher time frame is because higher time frame is clearer than the lower time frame. Why I say higher time frame is because higher time frame is clearer than the lower time frame. If you go to the hour time frame, right, and we reset this chart so we can see what's going on to the left, you can clearly see that price is on a uptrend. Just by seeing the 1 hour, just by seeing this 1 hour, you can see that price was on a uptrend right now. Price is clearly an uptrend. If we was to go down to the 5-minute, you wouldn't know what type of trend we're on. If it was to go to the 15-minute, you wouldn't know what type of trend we're on. To you, it would look like consolidation. You would have to zoom out, and even here, you would get lost in all the candles. Now let's go back to the 1 hour. We go back to that 1 hour, and we can see so much. We can see that price made a high right here. When price made a high right here, price was slowly breaking back above and stayed consolidating. But in the consolidation, price was maintaining this level up here, but slowly leaking under. Now, as you can see, when price slowly leaked under, it made a lower high, then ended up making a new low, now retesting. I want you to know that price is retesting because this is a trend right now. If price fails to break this level and shows lower high momentum, how we could play this is just looking at lows. If you see that price made a lower low right here, then made a lower high to make another lower low, you want to trade under this lower low. Simply because on higher time frame, you know that under this low is a new support level that we have to come to. Simply because when price makes lower lows and highs, it's a simple chain reaction. If price makes a new low, it is going to buy. But if price is buying, you need to see how high and how far it's buying in the first place. If it's failing to break, if it is breaking, then because obviously you can see it was doing a lower high momentum and now it's showing you a new high. Now it's time for you to see structure, see where the support and where the resistance is at in market structure. This is why
it's easy to get lost without understanding what buyers and sellers have to do to move price in the first place.
That's really it. That's part one. I really wanted to break down the key parts into seeing the charts and understanding the charts before we even start executing and understanding big impulsive movements, risk management, and so much more. So that being said, that really is it. If you guys have any questions, please let me know. And that's really it. Just got one more thing to say. We can go that way. If you made it to the end of the video, just want to say thank you so much for supporting me, checking out the price action guide. You guys already know the vibes. I understand that it's been really taking me a long time when it comes to dropping content, and in reality, I really want to focus on doing it my way, making people laugh and learning knowledge both ways, which is why, if you guys remember at the start, I was saying, aka to the pip, I started a content creating page, which I will be doing a lot of fun stuff, being myself. It'll include a lot of stuff, so if you want to check out what will be on that page, definitely go to that page because I will be dropping an introduction for myself and about what I want to be doing on that page, especially how I see this page going. So other than that, this is really it. You already see the setup. I'm about to get back to it. Be great. The only way's up, and I'll see y'all later. Peace.